Good evening, this is Duane Lowry for the DPP Grain Desk on Sunday, September 29th. The calls tonight are probably going to be a little bit easier. That's kind of a default setting based on trader sentiment and based on the fact that it's harvest time. The market's closed on somewhat of a soft note on Friday, despite the fact that markets did close higher on the week. So I think it's not unreasonable to expect that the markets will be a little bit lower to start. That being said, I don't know where any new selling is going to come from. The market's saturated with short positions. Sentiment's bearish, but where does the new selling come from? This is a time of year that spec shorts hope and expect the producer to bail them out of short positions with producer selling because it's harvest time, but I don't think that's going to happen. These are cheap prices, cheapest the producer's seen since the 09-10 marketing season, and we've got plenty of storage space. Cash balance sheets that don't force anybody to make sales. So I don't think there's going to be much selling here. I think a lot of this is going to depend on how yields end up, what the yield trends are in the western Midwest, and we've barely gotten started. Most of what has been started were the early planted corn, which is going to be the best corn. It's probably the early planted beans, which we expect to be the best beans. So we really haven't got into much of the crops that have suffered the worst from late plantings to then poor season development late in the season because of lack of moisture and temperature threats, not to mention a slow development process during the first half of their growing season. So I think there's still a lot to be determined yet. There's been a lot of talking up of yields in the making the rounds in the trade, but all you got to do is look at the weekly harvest progress, and you know that we're just repackaging the same early yields from the south that we'd seen before. So we really don't know what we're dealing with for a national yield trend. My suspicion remains that we're going to have disappointment in western Midwest beans and corn both, with the soybeans being the most capable of having a significant impact on carryout and to the point where it could affect price trends. I'm not sure that that's true in corn, but I think the lack of producer selling is very much has the potential to create short covering activity in the futures market, and I think the technical conditions certainly are set for short covering there. We've got a lot of shorts in the trade that have been there for quite some time, but that remains to be seen. The other development over the weekend continues to be what's going on in Congress relating to passing a continuing resolution and avoiding a government shutdown, and also the raising of the debt ceiling, which, according to the Treasury Secretary, somewhere around the 17th, 20th of October, somewhere in there, the government will run out of money and run out of borrowing authority, and unless they raise the debt ceiling limit, we'll be dealing with a default situation. I think when traders went home on Friday, there was uncertainty about the whether the government would face a shutdown, but most people thought that, well, if they face a shutdown, it'll be for a day or half a day. It won't be significant, and I don't think anybody had any serious belief that the government would not raise the debt ceiling limit and would allow a default to take place. But I think after the developments this weekend, it's become quite apparent that the government shutdown on Tuesday is almost a certainty, and the level of political posturing and partisanship and the inability to come to some sort of a compromise, I think, has elevated the concerns in the trade that the debt ceiling debate may very well go right to the wire and possibly could lead to a default. And I think that we're going to see that expression of greater fear expressed in this week's market action. In fact, it may very well be that Wall Street is the only thing that's going to be able to force the Congress to reach a debt ceiling agreement, just like in 2009 when they had the TARP vote. They couldn't get a yes vote until the stock market was down 500 or 600 points, whatever it was, and then all of a sudden there was enough push from business and individuals to force Congress to pass the TARP. Whether you liked it or not, that was the end result. It was Wall Street that finally forced something to take place, and it may very well be that happens again with the debt ceiling. I think there's a good chance that the outside markets will be reacting with unease regarding the developments of the possible shutdown and the uncertainty towards the debt ceiling. What impact that has on agricultural futures markets, if any, I'm not sure. But as far as outside markets are concerned, I think it's going to be a concern for the stock index. It's going to be a concern for the energy markets, and we'll have to wait and see if there's any spillover impact on agricultural markets. The other thing I want to point out, just going back to the grains here again, just remember where we're at here. The wheat on Friday settled at the highest levels we've seen since the 12th of July, and this occurred despite universally bearish or lethargic trader attitudes toward wheat for several weeks. Corn right now is being weighed down by near universal bearish trader sentiment, but yet we still haven't violated lows made in August, and the overall technical conditions don't act like it's conducive to building downside momentum, and we're certainly not going to find a lot of fundamental based producer level selling activity. So where's that new selling come from? I think it's question mark. Even more significant in terms of how trader sentiment has been so bearish, even beans that rallied $2.50 from the lows made in early August, throughout that entire time, most traders denied broad and historically significant weather data, saying it would not materially impact national yield, despite a universal belief and acceptance of the importance of August weather to the soybean crop. Beans have had a sell-off here, broke approximately $1 off their highs. That was after rallying $2.50 from the early August low. The market's had a little bit of a recovery from that break, but yet it's still at the bottom end of the parameters over the last 2 or 3 weeks. But the trader sentiment remains bearish. They don't believe the beans can sustain much of that rally that was put on during August, and there's a lot of belief that the yields are going to get miraculously larger than what we thought they were 2 weeks ago. I don't really understand that, but that's the level of bearishness that's in the trade. Speculators hope and expect a producer to make sales. I don't think that's going to happen. There's plenty of storage space. There's plenty of sound financial balance sheets that will not require the producer to make any type of selling activity if he doesn't want to do it, even between now and the new year. But the big impact here fundamentally is we've got to see what national yield trends, how they're going to be impacted by harvest results in the western Midwest. I think I don't think we've had enough data there from the areas that were planted late. And let's face it, all you got to do is go back and look at the planting data. Most of the acres in the western Midwest, even parts of western Illinois, were planted very late, and they all suffered dryness during August and some heat as well. And I think that the impact on yields is going to be more than what current sentiment expects, but we'll have to wait and see how that finds out. It won't be long because the weather outlook for the next 2 weeks should allow harvest to continue to expand at a fairly, or at the most aggressive pace as the farmer wants to go. Let's put it that way. The weather will not be influencing or hindering him by very much. I want no part of any bearish stance, whether it's the producer level or the speculator. I see no benefit in trying to trade the markets from the short side. I see no need or benefit or no enticement for producers to maintain hedge positions. I think there will be better selling opportunities ahead. I think it's good to have offers in above the market, especially if you can find some market that's got a little bit of carry. But I just don't see much of a enticement to be making sales at this time. For the DPP Grain Desk, this has been Duane Lowry. Thank you.